Hey everyone, welcome back to Corporate Decoder. Today, AgEagle Aerial Systems Incorporated, or UAVs, just filed a current report and I am seeing one big red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced its financial results, and it seems they are facing some tough times, which is worrying given the broader market for drone technology. AgEagle Aerial Systems Inc. released their latest financial update on the 14th of August 2026. This is a crucial document where companies tell investors how they are doing financially. Now, AgEagle is in the drone business, specifically focusing on aerial systems for various applications. Companies in this sector can be quite volatile, and investors are always watching closely for signs of growth or trouble. Their stock is traded on the nice American under the ticker UAVs. The market seems to be aware of some challenges, with recent headlines pointing to potential going concern warnings, which is a serious alert that a company might not be able to stay in business for much longer. This filing comes out right after one of those concerning headlines, so we need to see what the numbers say. The main event in this filing is the announcement of their financial results for the quarter ending the 30th of June 2026. This is where we get to the core of how the company is performing. The company put out a press release detailing their performance. While the full details are in that press release, which is filed as an exhibit, the fact that they are releasing this information through an 8K filing means it is considered significant news for investors. We are primarily looking at the information contained in that press release, Exhibit 99.1. These filings are important because they give us a look behind the curtain, showing the actual financial health of the company, not just what they might say in a marketing presentation. Now, looking at the broader context from recent news, AgEagle has had a rough time. Headlines mention swings to losses and warnings about their ability to continue as a going concern. This is a big deal. For example, companies like Bed Bath & Beyond and Tupperware have faced similar warnings, and their stock performance and ultimate fate have been very challenging for shareholders. AgEagle's market cap is currently around $64 million. And its stock price is hovering just over $1, which is well off its 52-week high. This suggests investors are already nervous. The filing itself is quite brief and primarily directs us to the press release. What is most important here is what that press release says about their operational and financial condition. The fact that they had to issue this report highlights that there are significant developments worth reporting to the Securities and Exchange Commission, or CC. What we really need to focus on are the numbers from their financial results. When a company warns about going concern, it usually means their cash flow is negative, they have a lot of debt, or their revenue is declining rapidly. We are seeing a pattern in the recent news about revenue falling significantly, for instance, a 62% year-over-year drop in their first quarter. If this trend continued into the second quarter, it is a serious problem. The filing does not contain detailed financial tables directly within the 8K body. Instead, it points to the press release. This means we need to rely on that press release for the specific numbers. However, the nature of an 8K filing, especially one reporting financial results, means that the information shared is material. It is the kind of news that can significantly impact a company's stock price and its future prospects. The core issue for a company like AgEagle operating in the technology sector is often its ability to generate consistent revenue and manage its expenses. Drone technology is promising, but the market is competitive, and companies need strong execution to succeed. When you see warnings about going concern, it means the company's management and auditors are questioning its ability to operate for at least the next year. This typically happens when liabilities exceed assets, or when there is a severe lack of liquidity. For investors, this filing is a signal to dig deeper. We need to understand the specifics of their revenue, their costs, their cash on hand, and their debt obligations. The fact that they are a relatively small company with only 58 employees and a modest market cap means they have less room for error compared to larger corporations. The biggest risk for a company in this situation is often a lack of access to capital. If lenders and investors lose confidence, it becomes very difficult to fund operations, develop new products, or even make payroll. This can quickly lead to a downward spiral based on the available information and the recent headlines. My biggest concern for AgEagle Aerial Systems is their ability to stabilize their financial situation. The warnings about going concern are not to be taken lightly. While the drone industry has potential, companies that cannot manage their finances effectively will struggle to capitalize on it. What I'm actually looking for in subsequent filings is a clear plan to improve profitability and cash flow and evidence that they are making progress on that front. Without that, the risk of delisting or bankruptcy remains very high. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.